political topic: the potential impact of Donald Trump and Kamala Harris on the US stock market if either were to be elected president. We'll examine their political platforms, policies, and how these could affect market performance, focusing on investor sentiment, corporate earnings, and broader economic conditions. Let's start by breaking down the key factors influencing the market. Stock markets are primarily driven by expectations, how investors believe future economic conditions will unfold. These expectations are shaped by a candidate's policy proposals, leadership style, and past actions. Former President Donald Trump's potential return to the White House would likely impact the stock market in several ways, largely based on his past economic record and proposed policies. Trump's administration focused on tax cuts, deregulation, and a generally pro-business stance. His tax cuts, particularly the 2017 Tax Cuts and Jobs Act, lowered corporate taxes, which many analysts believe helped boost corporate profits and stock prices. If Trump were re-elected, investors would likely anticipate a return to similar policies, which could positively impact sectors like technology, finance, and energy. Trump's deregulatory approach, particularly in energy, banking, and environmental policies, was seen as favorable to many large corporations. By removing restrictions, companies could operate more freely, potentially increasing profitability. If this trend continues under a second Trump term, investors in industries like oil, gas, and manufacturing could see positive stock movement. However, Trump's more protectionist stance on trade, such as his tariffs on China, could create uncertainty. His administration's America First approach, if reinstated, could lead to tensions in international trade, impacting global supply chains and potentially hurting markets in the short term, especially for multinational corporations. Trump's leadership style is often characterized by unpredictability. While his policies might initially boost market confidence, the uncertainty stemming from his approach to trade, foreign relations, and domestic governance could lead to higher market volatility. In summary, Trump's re-election could likely lead to short-term stock market gains due to tax cuts and deregulation, though trade tensions and market volatility are factors investors will need to watch closely. On the other hand, if Vice President Kamala Harris were to ascend to the presidency, investors would face a different set of expectations. Her policies are often viewed as more progressive, with a focus on social equity, environmental sustainability, and worker protections. Let's break down how these could play out in the market. Harris, alongside President Biden, has proposed raising the corporate tax rate to fund public investments in infrastructure, education, and clean energy. Higher taxes on corporations could put pressure on company profit margins, particularly in sectors like technology, healthcare, and finance. As a result, investors might initially respond negatively to the prospect of higher taxes. On the other hand, Harris has strongly advocated for investment in green energy and infrastructure projects. This could benefit sectors like renewable energy, electric vehicles, and infrastructure development. Companies involved in clean energy or the green transition could see a boost, as government incentives and investments in these areas might grow. Harris has also supported stronger labor rights protections and more stringent regulations on businesses to address social equity issues. While these policies may benefit workers and lower-income households, they could also increase operational costs for businesses, particularly in industries like retail, healthcare, and technology. The stock market might react cautiously to such regulatory expansions, especially if businesses face higher compliance costs. Her administration would likely focus on increasing access to healthcare, education, and housing, which could have long-term positive impacts on overall economic stability. However, the potential for increased government spending to fund these initiatives could result in higher deficits, leading to concerns about inflation or rising interest rates, which could negatively affect stock valuations in the short term. In summary, Harris's presidency could lead to more uncertainty for the stock market in the short term, particularly due to higher corporate taxes and potential regulation. But longer-term gains might emerge in sectors tied to infrastructure, green energy, and social equity. So, what can we expect for the stock market under a Trump or Harris presidency? Under Trump, markets might see initial gains due to pro-business policies and deregulation, But trade uncertainties and volatility could create risks. Under Harris, markets might face more challenges in the short term due to higher taxes and regulation, but long-term opportunities could emerge in clean energy, infrastructure, and social programs. Ultimately, market reactions will depend on how investors interpret these policy proposals and their expectations for future economic growth. As always, the landscape is dynamic, and investors must remain vigilant in navigating the potential outcomes of either candidate's presidency. Thanks for tuning in, and stay informed about how these political shifts might shape the financial